Hey guys, Akil Stokes here. Welcome back to another Trading Edge video. Hey guys, Akil Stokes here. Welcome back to another Trading Edge video. I am in a spectacular mood today. I can't quite put my finger on why that is, but I'm excited to be here with another video for you guys. I've got a lot to show you, and if you guys are new, this is a weekly video that I do showing you the top trading ideas that are on my radar for the week ahead, and also showing you different examples of really the various ways that we can perform technical analysis in the market to find high probability trading opportunity. Now, before we hop in, there's a lot to see on this channel. There is the weekly Trading Edge video, which you're watching right now. There are daily podcast episodes, which are available on your favorite podcasting app as well. And there is a short section with an incredible amount of content. I usually upload 2 new videos a day, kind of short, quick trading tips that are meant to help you overcome those obstacles and kind of just, keep you motivated and inspired as you go along your trading journey. So make sure you frequent the channel, make sure you subscribe. That way my stuff pops up in your feed and you don't miss it. And let's hop in. So we're gonna get started here on the dollar yen. And the dollar yen is actually a pair that we just looked at the other day here on the YouTube channel, right? So if you guys are new or if you don't frequent the channel and visit it on a regular basis, make sure you do so because many of our conversations actually follow up on previous conversations that we have. And I advise that you go back and watch that video for kind of an in-depth analysis of this pair. But I'll kind of give you the short version of it, right? We're coming off of a period of consolidation. We have kind of an upward channel, rising channel right here, equipped with divergence here on the RSI. We broke and closed below it, and we are looking for a move lower. Now, in the previous video, and again, I'll link that below so you can check it out, we talked about where we're looking for price to move lower to, but we have some more interesting news that comes up for this opportunity. So this week in the market, the Bank of Japan, BOJ, has an interest rate decision. And one of the considerations for this interest rate decision is a hike. Now, I think they're going to feel it out. They're going to see what happens with the Trump inauguration first and the idea with policies and all the stuff we've been talking about over the last few weeks before they make that decision. And Bank of Japan is usually really sneaky. They do it at weird times where no one's watching and blah, 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 blah. But knowing that there is the chance for a hike, that would be a positive sign, for the yen. Now, on this pair, the dollar yen, right, a positive sign for the yen, which would mean yen strength, would mean that price would push lower, or the expectation would be that price could push lower. And that lines up in the same direction as our technical analysis. So, we talk about technical versus fundamental trading all the time. And, I do believe that you have to be grounded in one over the other, meaning that one takes precedent. So for me, technical analysis is always first. In trading, fundamentals is second. In my investing, fundamentals are always first. Technical analysis is second, right? It's going to be really, really hard if you kind of, balance them both evenly. But when we look for kind of these bigger trading opportunities, home run trading opportunities, it's okay to implement kind of a hybrid style of trading. And what that means is that when your technicals are pointing one way and then you do your fundamental research and your fundamentals are pointing the same way, you can actually get some much bigger moves in the market. And this looks like it could be one of those opportunities. So again, go back and watch the original video for the full details, but just to follow up on that, again, we had a break and close below structure. We were looking for an advanced pattern formation that never came, but you can see that we did retrace right back up to our previous rejection zone right now. We have wicks on the downside of getting rejected. We got below there. We have wicks on the upside, boop, 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 getting rejected. Now we're right back in that level. And if we go one more time frame to the hourly, you can see that we have a chance of getting a double top. So what that means is that price rallied up here. We found resistance, we pushed off of it, we had a secondary test and hold, right? Very important that we would need a hold for the double top. And if we can get this, again, that's a good bearish sign to look to trade down to this first level of previous structure. And then of course the extended profit levels as well with very low risk. Because again, when it comes to this double top, stop loss just has to be above this level. To be honest with you, if you want to be even more conservative, you can get it above here. But either way you look at it, even to the conservative target level, if I can find my deal here, we're looking at, again, let's assume it completes somewhere in there. even to the conservative target level back at a retested lows, you're looking at a really good risk reward. If you have even a smaller stop loss, you have an even better risk reward. If you're shooting for the extension, well, it just keeps going and going. So regardless, this is I don't want to call it a grade A opportunity, because as soon as I do that, I'm going to jinx it, because that's how the markets work. But this is certainly an opportunity that I think you guys should consider. Next up is going to be the dollar Canada, the loonie. And this is a little bit of the opposite of the dollar yen, where the dollar yen, I really like that opportunity. This one is a trading opportunity, but one that I don't really like too much, and I'll tell you why. So we've come to a period of consolidation. This is called a high and tight flag pattern, right? Price action has rallied up in a clear directional move, and then we've essentially gone sideways for a few weeks here. Well, we ended this past week with a break and close above the highs of this channel. If you've, listened to this channel, the YouTube channel, not the channel on your chart, you know that a higher high, higher close, if I identify a higher high, higher close, it allows me to predict a move higher. Now, that doesn't mean that I just jump in with all my money and trade high, right? Hop on the bull and ride it. That's probably a bad idea. The next part of the predictionary process, is that a word? Predictionary? I should look up predictionary in the dictionary. I'm in a good mood. Everton won, we didn't blow the game. The next part of that predictionary process is asking myself, if price is likely to go higher, then where is price likely to go higher to? And this is where I personally run into trouble, and I'll show you why. If I just draw a line out where price is currently trading at, let's make this right here, and I zoom out, we'll go to a weekly just to give us some room, you're gonna see that we're not in as much of no man's land as you would think. We're actually at a previous structure high from back in April 2020 when something happened. I can't quite remember it. Trauma, right? Even on a daily, right, this level still exists. It's a little bit different, but you can see these highs appear exist. So when I analyze this market, I say I because this is my style of trading. I am counter trend first, trend continuation second. So I always kind of have like a scaredy cat version of predictions. I don't really see a lot of room higher, at least enough room higher for it to be a trading opportunity for me. So this is why it's not an idea that's on my radar. But if you are a trend-based trader and you're banking on a continuation higher, which we can certainly have that. We can test the highs of, right here, 145.50s. We can test 146 even, as high as 146.60s, I would say. Then there is some room still left on the table. And something else that you may want to use to make that prediction is a Fibonacci. And we're going to do it in two ways. One way I did already. The second way just came to my mind right now. One is we have a potential advanced pattern formation inside this consolidative level. It's going to be a butterfly pattern. I won't spend a lot of time doing that because I got to get my kids lunch in a little bit. But a butterfly pattern is going to look something like this. We're going to have an X to A, swing high to swing low, an A to B right here, a B to C, and a CD extension that goes up to our 127, 145. 13, right? So that would be the first area in which you would look for the butterfly pattern to complete. That also becomes an area that you can look for a potential profit location at as well. Now, the next thing I want to do is I want to take my Fibonacci extension tool really from, and this one's a little bit difficult because it's hard to get a read of where this impulse leg starts, but this last swing, which the low started right here at about 39.30s, up to here and back down, and I'm going to look see if there's any Fibonacci confluence there, and I have two levels setting up. I have a 113 that doesn't really mean too much for me as far as extensions go, and I have a 127 up at 46.20. And remember, 46.20 is still within that range that we spoke about. So if you're looking to take an extended target here, these are two ways you can look for, or you can look to make predictions on where price may go next using that prediction. There's an old school way of taking the range of the channel as well. I've never actually tried this, but I've read a lot about this in books, taking the range of the channel and then copying and paste it, and that's going to put you a little bit higher. I'm not really a big fan of that, but that's another method as well. The point is, when you have these situations where you don't have a clear, maybe like structure level to take profits at, these are alternative ways that you can do so. Next up is going to be the pound New Zealand. This has an interesting situation on it, right? We've been consolidating right here. You can see on the daily chart where we've kind of gone sideways. We've shown signs of a bullish rejection with the wicks to the downside, but we haven't really gotten any signs of bullish confirmation, meaning any higher high, higher closes, anything like that. And if we go down to the 4-hour chart, you're going to see that we have a nice little flaggish type pattern. I'd love to see a sharper kind of impulse leg going down, but no doubt we do have an upward consolidating channel. It comes after a bearish directional move. This could be considered a flag pattern for sure. Now, the hard part about this is that we have lots of really stair-steppy, as I call it, structure levels, right? If we go backwards from here, you can see structure just kind of stair steps. We have here, we have here, we have here, we have here. And the question that comes to mind is like, which one of these are important? Because if we've hit the important level already, there's no reason to think that we're likely to go lower. If we didn't hit the important level already, then we can certainly still go lower. For me, the most important level is going to be this block of consolidation right here. And I noticed from just experience and years in the market of identifying support and resistance, because that's the main style of trading that I do. But we can also do something like this. We can bring in volume, our volume indicator, and really ask the market what it thinks is important. So let's take it from, let's just say, just swing low to swing high. And you can see where we have these spikes of volume, these are going to be the important levels. And one lines up right in the middle of this zone. Even if we went to a lower time frame here and we did it from, the same, I'm going to erase this and just do it from the same level. Where are we at here? Boop, let's go all the way down here. Again, you can see the biggest spike right on the dot right there in that zone. So it doesn't mean that this current level of structure isn't important, the one that we're holding at. It just means that this is more important. It's the same philosophy we talk about for you guys on the platform when we talk about overlapping and underlapping structure, where the higher one, or the one that's further away, is the most important one, and how that could be a little bit of a warning sign for our protective stop losses. It could be the same way with profit taking as well, where if you're willing to take a little bit more risk, it's a clue that tells us, hey, there is a chance that we can blow past this A level of structure and go to the B level of structure. Not A and B, meaning ranking them A better than B, but A being the first one, B being the second one. I should probably think about things I say before I say them, but hopefully you guys get what I'm saying. So keep an eye on this flag pattern for a potential bear break to the downside and a move back down to, what is this, 215s, let's call it. And yeah, decent opportunity there for you flag pattern traders. Hope you enjoyed the vid. Remember, subscribe if you're new. Check out that short section for quick daily tips. Check out the Trading Coach podcast for pretty much conversations on any trading topic you can think of. Hit that like button to show me some support. And if you ever have any questions or comments or ideas that you want me to talk about, type them in below. I do read each and every one. All right, gonna make my kids some food, then hop in for some more NFL playoffs. Until next time, plan your trade, trade your plan. Take care.
I wanna be the best in the game, invest in my name, check no restraints, I'm obsessed with the pain, I ingest, I retain, assess and I change, possessed by the thought I'll be free one day from society's restraints, money, clout and fame, mud, disease, a plague, we all love to hate, have to play the game, have to make a name, all our insecurities are on display.